Chasers! Welcome to the Chasers channel. Picture this. You're cruising down the M1 in a brand new dual cab beast. You think you've beaten the ATO and gamed the system. You think the work ute is your ultimate Fringe Benefits Tax free pass. Think again. The ATO isn't just watching the road. They're watching your odometer, your toll records, and even your weekend trips to the local Bunnings or the kids' Saturday footy. Today we're stripping back the chrome to see if your workhorse is actually a tax liability in disguise. I'm going to give you the truth about the 2025-26 Fringe Benefits Tax year and your workhorse ute. I'm your host, Chris Becks, a financial and business advisor with over 40 years of experience and the founder of the multi-award-winning CBEX Business Solutions for Good. And as this is an accounting and tax topic, as a member of CPA Australia and a registered tax agent, I'm obliged to give you this general advice disclaimer before we begin.
The advice provided is general advice only, as in preparing it, we did not take into account your investment objectives, financial situation, or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. You should also consider the tax implications on your financial situation. Chris Becks, CPA member number 805103 and registered tax agent number 629433015, is a director of CBEX Business Solutions for Good and is authorised to provide accounting and tax advice.
All right, now that is done, let's dive into this episode. We've all heard it at the pub. Oh, it's a ute, mate, it's exempt. That's a dangerous half-truth that could land you with a tax bill big enough to dent your cash flow for years. See, to be exempt, your vehicle has to survive a dual-layered gauntlet. It's not just about what the car is, it's about how it's used. First, let's talk design. If you've got a single cab ute or a panel van, you're usually in the clear because they're built for loads at least 1 tonne or more, not for carrying people. But the moment you add that second row of seats, the dual cab, the ATO starts licking its lips, so start getting nervous. So how does the ATO decide if your dual cab is a workhorse or a family taxi? They use a cold, hard formula from a ruling MT2024. They take your seating positions, let's say 5, and multiply them by 68 kilos. That's your passenger capacity. If that number is more than half of what's left of your payload, you're dead in the water. If your dual cab has a 900 kilo total payload, 340 kilos goes to the passengers, that leaves 560 kilos for the load. Since 560 is more than 340, you've passed the first test. You've got yourself a workhorse. But don't pop the champagne just yet. You've got yourself the right workhorse. Now, are you driving it the right way? The law says private use must be minor, infrequent and irregular. To keep the taxman from kicking down your door, the ATO offers a safe harbour under Practical Compliance Guideline 2018-3. But the walls of this harbour are narrow. Your detour on the way home from work cannot exceed 2 kilometres. That's barely a stop for a latte. Total other private travel for the entire year must be under 1,000 kilometres, and no single private return trip can exceed 200 kilometres. So taking the ute to a surf spot 3 hours away, well, you just blew your exemption. The ATO is now using AI data matching. They can see your registration and those toll records. Google Earth and AI can quickly show if your workhorse is on the bridge to the beach every Sunday. They know it's not minor or irregular. How do you protect yourself? You don't just hope for the best, you build a paper fortress. Firstly, you need a written company policy that explicitly limits private use. Secondly, even if you don't need a full logbook, record those odometer readings every 31st of March. If you can't prove you stayed under 1,000 kilometres, the ATO defaults you to the Statutory Formula method, charging you 20% of the car's base value in tax. And number 3, if that ute costs more than $80,567 inclusive of GST in 25-26, you might already be outside the safe harbour. Don't let a fringe benefits tax-free ute become your most expensive mistake. Chase the growth, but stay within the lanes. As with any financial planning or matters relating to tax, to ensure a smooth transition and make informed decisions, always get some advice from an expert before you do anything. It's good insurance against costly financial mistakes. If you found this helpful, make sure you subscribe to the Chasers channel, share it with your fellow business owners, and reach out before that supposedly tax-exempt ute turns into a big tax problem. Thank you for listening. I'm Chris Becks, and I look forward to presenting another episode to you real soon.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram @CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.